We got to get the flume.
Hey everyone, welcome to the webinar today. I cannot wait for this webinar, the top 2023 nonprofit trends, navigating economic uncertainty with data-driven insights. So everyone get ready to engage today. My name is Candace. I'm the digital events manager at Community Boost. I'll be your moderator for today, just keeping everything moving along. And I cannot wait to turn it over to all of our amazing panelists in just a moment. But I want to let everyone know that this webinar is being recorded, so you're not going to miss out on a single thing. You'll get the recording in your inbox tomorrow, and you will also get the slides to refer back to later, because there's so much amazing data that you're going to learn and dive into later today. I also wanted to let you know to keep the questions coming in. There is the Q&A pane. We'll be keeping an eye on the chat as well. But put all of your questions for our panelists in the Q&A pane, and we will get as many of them answered both at the end, and I might even throw some questions in during the webinar. So it's going to be really amazing. I'm so excited you're here. So just to start it up today, I would just love to learn more about you, what organization you're with, and where you're from. So fire up the chat, and I'd love to see all of you. So I hear Bob's from Virginia. We have Melissa from North Carolina, Beth from Omaha. Wow, so many from all over the world. We have Brazil here, Puerto Rico. Cameron lives in Puerto Rico. You guys can hang out. I guess it's a big place. Malawi, Oklahoma, the UK, Central Illinois. Wow, this is so awesome. So excited to have you here. So many great causes. And I'm really excited to dive into the latest nonprofit trends. The insights you're going to get today are things that you can take away and really apply to your strategy all year. So really excited for our content. So I want to turn it over to our speakers, starting with Pat. Just give you the opportunity to introduce yourselves, and we'll get into our content in just a bit.
All right, cool. I'm Pat Duffy, co-founder of The Giving Block. We started off helping nonprofits take crypto donations, built a lot of the crypto campaigns, the Crypto Giving Tuesday, built kind of the main site donors go to find nonprofits and give them cryptocurrency, and just provide end-to-end fundraising services, from like a technical solution that automatically sells crypto to strategies around effectively fundraising it and integrating into strategies. And then as of last year, we merged with a company called Shift4, a kind of behind the scenes payments company like Stripe. And since then, we've moved into stock giving, DAF giving, making those digital on nonprofit sites, and evolved into a sort of non-cash fundraising approach. And I will kick it over to Cam.
Hey everyone, welcome. Really excited for today's session. My name is Cameron Ripley. I'm the CEO and founder of Community Boost, and we're a digital marketing agency that specifically helps nonprofits accelerate revenue and ultimately impact.
And I'm Abby. Oh, sorry. I'm Abby. I'm part of the team over at Neon One, and I am calling in from sunny Central Florida. So see some of my Floridians in here. I have been working on some research lately into some things that nonprofits are doing that's really wonderful. So I'm really excited to be talking with everybody here about what 2023 and the future is shaping up to be.
Abby, where are you in Florida?
I'm in Lakeland, Florida, between Tampa and Orlando.
Yeah, I'm in Tampa.
Oh, okay. It's a very small world.
That's great. Well, I love this group here. This is going to be a great opportunity for all of us to really dig in and learn. And so what I would love to also do is hear a little bit more about not just you guys, but also the companies that are being represented here, as well as your reports. So I think everyone that's part of this webinar is coming from different places, coming from different reports that we're pulling from. So Abby, we'll bring it back to you. Tell us more about Neon and your email report.
Definitely. So Neon One is a platform that is designed to help nonprofits, especially small and mid-sized nonprofits, connect with their supporters and help them communicate with them and inspire generosity in them. And we are coming today with a report that we recently published on kind of the state of nonprofit email. We did a study that looked at more than 37,000 email campaigns sent by almost 1,500 nonprofits. And we looked at benchmarking and what's working and where nonprofits can kind of improve if they want to. And then we did a breakdown of the most successful or most engaging email of 2022. So you can see all of the tips in action.
Thanks, Abby. And now, Pat, you shared a little bit more, but I would love to learn more about the Giving Block and also really your report that you're referencing today.
Yeah. So I explained the Giving Block as my bio, which I always do. We've pretty much become the same thing at this point. Yeah, the main thing I guess nonprofits should know about us is we take kind of an active approach to non-cash fundraising. So we weren't the first company to create kind of widgets for easily accepting cryptocurrency, stocks, staff gifts, stuff like that. So we've systematically improved those tech stacks, just made it more automated for donors and nonprofits to accept these gifts directly on their site. But the bigger thing we do is we try to enhance fundraising outcomes. So we've just taken a lot of nonprofits, about 50-50 split between our clients or groups that haven't accepted crypto, stocks, staff, et cetera, but the other half have been taking it. And we not only kind of upgrade their tech stack, but we help them fundraise more effectively. So we're trying to like increase the percent of their donors that are giving crypto, stock, staff. We're trying to increase the average gift size, increase conversion rates, retention, stewardship. So taking more active kind of attack approach on assets. And then the report we do every year is the industry's crypto philanthropy report. We pull in data, we try to unpack like what drives donors to give cryptocurrency. Obviously the tax incentive is a big piece behind it, but it's a new donor demographic. So we're just trying to give people more insights into what makes these donors tick.
Awesome. Thanks so much, Pat. And I put the link in the chat so everyone can go ahead and get both Neon and the Giving Blocks report. And so Cameron, tell us more about Community Boost and the acceleration report.
Sure. Yeah. So, as I was mentioning, at Community Boost, we're a digital agency. We're about a 75-person team dedicated to empowering nonprofits and causes to, do their amazing work and help them change the world. And so our main initiative is often to drive, more fundraising, more, just online conversions, more supporters. And we really serve all different nonprofits, all sizes and sectors. Since I think I'm coming up on about 11 years since founding the company, but we've served over 1,000 nonprofits directly. We've helped drive over $100 million in funding for like specific channels we manage for our partners. And and so that's kind of what we do. And then I'm really excited to talk today about the acceleration report. This is our second one, and we had, I think, over 1,100 respondents for this current acceleration report. So we're going to definitely hit on some of those highlights.
Awesome. Thanks, Cameron. And so I'm excited to really learn more about all of you here today. So you learned about our speakers. Now we want to learn about you. So what is your organization's biggest challenge preventing growth right now? So I'm going to launch a poll here and give everyone the opportunity to answer and really tell us more about, is it budgetary constraints? Is it limited time? Is it staff turnover? Is it lack of education on how to leverage tech and resources? Is it board constraints, technology, storytelling, or something else? Please share. If it is something else, please share it in the chat. I see Erin says it's a small shop. We wear many hats. Daniel says impact reporting and social work. That's big. That's such a great addition here. Bob says our service is very small, so growth is limited. Outdated tech all the way. Global scaling. Would love to learn more. Yeah, small shop, many hats. I think I'm seeing a lot of similar responses, and I'm gonna end the poll in just a moment. I'll give everyone 5 more seconds to respond. 5, 4, 3, 2. Get your votes in there. Okay, perfect. I'm gonna end it now and then share it with all of you. So it looks like for this group here today, budgetary constraints have really pulled out in the lead with 53%. I think this is something we're actually going to be tackling a lot during our conversation today is, addressing those budgetary constraints and what it means in the sector right now. Also limited time coming in number second and number 2 is actually really consistent with things we've seen across the sector. Definitely feel pressed for time. Staff turnover is huge right now. Lack of education on tech, boards constraints. So thank you all for sharing. And I really look forward to really getting into it and addressing a lot of these concerns during our webinar today. Awesome. And I'm seeing even more engagement in the chat. Just as a reminder, you will get these slides and the recording in your inbox tomorrow. So, all right. Now, I want to really start by asking you all a question because you're all here today presenting data from these reports. And I just wanted to know really why. Like, why is knowing the latest data in the nonprofit sector so essential for really charting paths to growth this year? So anyone can chime in first.
Sure. I'll go ahead, Abby.
I'll start. I mean, the biggest reason is that things change really quickly, and they can change pretty dramatically. I've been in this industry for 10 years now, and the shift in donor behavior and donor preferences and optimization best practices has been pretty unbelievable, and it can happen in the space of a year or two. So when you're staying on top of the latest data in the nonprofit sector, and as much as you can nonprofit specific data, it's easier to adapt because changing a process that's 1 or 2 years old is much easier than changing a process that's 5 or 10 years old. So keeping on top of it is a really important part of giving your supporters what they're looking for.
I definitely agree with Abby, and I think kind of building off of that, honestly, for me, I think the biggest reason to really know the latest data is because it empowers you, the leaders, the marketers, the fundraisers, really the doers, to have more data-driven insights and kind of proof or even arguments to back up the change that you want to test, the innovation you want to try, to take the necessary calculated risks that are really important often too when we're trying to enroll what at times, at least in my experience, can be a pretty risk-averse leadership team, a risk-averse board. And so this data can empower you to really disrupt the status quo at your nonprofit.
Yeah, I agree with all of those things. The only thing I would tack on is looking for the things that you're not ready to assimilate into your strategy. It's sometimes what's most helpful. Nonprofits are always looking for something they can build upon, taking a strategy that's out there that can plug right in. But stuff today, right? We'll talk about things like cryptocurrency. I think that's always a good example of if you're not accepting crypto, or we're talking about AI or whatever else it might be, seeing things that you're not ready to incorporate into your strategy can give you a good indication as to whether or not you're kind of falling behind a trend. The more that you see things in reports that you're kind of uncomfortable with, if they start showing up all the time, you get this feeling that the industry is moving ahead, maybe without your organization, which can be a good indicator that you might need to adapt to something new.
Awesome. Thanks so much, Pat, and everyone. And I want to take it a step further. So with all of the data that we're going to be exploring today, I want to explore this idea of effective innovation. And so I will just put that to you to define it and tell us what you think effective innovation could look like in the nonprofit sector.
Candace, do you want to call on who you want to kick off?
Yeah,
Okay.
go first.
Did you say me?
Yeah, you're up.
Okay. Yeah. Sure. Yeah. Well, okay. So effective innovation from I guess, my perspective, marketing perspective for me really means like systematically testing and marketing where people's attention is actually at, which is online and mobile and just across a wide range of channels, but really just like having a systematic approach to how you want to try new things.
And Abby would just love to hear your thoughts.
I kind of take it the same way, like do it systematically. Start with the tools you have and identify the processes you have and see if there is anything you can try differently with those tools. And then if you identify a problem that you want to solve or a goal you want to reach or something new you want to try, make a plan and to use Cam's word, a systematic plan to get there instead of just throwing a bunch of stuff at the wall all at one time and seeing what sticks. Having a plan and a goal and working toward that methodically will make you much more effective than just trying to do something because it comes up where you had the idea to do so.
Yeah, I think that's so powerful where there's this whole thing going around of shiny new object syndrome. And so to your point, yeah, just moving away from that and moving into those strategies that are most effective. So Pat, would love to learn more about, what does effective innovation really mean to you and look like in the sector?
Yeah, we deal with some of the most shiny new object syndrome, which is, as you would expect, things like cryptocurrency and NFTs. Like everyone kind of wants to come in and like mint their own NFTs or like start a DAO, versus to your point, like the first things that we approach, like in terms of effective innovation, is to Abby's point, like layering it into what you're already doing. I cannot tell you just from a non-cash asset standpoint, like how many nonprofits have not systematically exposed their younger audience in particular to these options. Like they have for stocks brokerage instructions sitting on a page somewhere, like they just accept a check in the mail when someone uses a DAF, and they're not like injecting crypto stocks, DAF options in front of any donors, let alone young donors who just aren't being given this option to give. And the average gift size is so much higher. So to everyone's point, it's like like being systematic about it, making sure that you're consistently taking a strategy you have, a tool you have, and like trying to find ways to use it, not finding every shiny new object and throwing it out there for a couple of days. If it doesn't work, looking for a new kind of scratch off lottery ticket. And then the other piece is just consistency in general. Like I can't tell you how many nonprofits will do like an innovation summit with their team, like once every year, 2 years, and they'll sit in a boardroom, put post-it notes on a wall, come up with a really big plan, and then try to stick to it for 24 months. It's like the world doesn't work that way anymore. Like more data is being created on a daily basis than like on all of human history combined up until fairly recently. Like you have to just get into a room every week or a couple of weeks, every month, whatever you can manage, and just like look at your list of innovative things and try to unpack it a little further, and figure out what needs to be put in what order and why. It's kind of like a drumbeat approach to innovation, keeping the muscle group strong versus that one big home run swing for sure.
Pat, that was incredible. I loved that insight and kind of approach to it. And I want to switch it around. What does ineffective innovation look like? So Pat, would love for you to just take that away.
Yeah, I mean, it's inverting all of this. So like for us, I'll just keep using crypto as an example because that's what we built all of this on. So many nonprofits will add a donation option and wait. They'll just like, for something like crypto, they'll just add like a crypto option on their like donate page. Like there's no like crypto option, other ways to give. There's no active exposures, like a snippet in the Capital Chem email where it's just like, hey, by the way, we take assets. You can give us stocks, crypto DAFs, et cetera. Like there's no kind of active attempt to reel these gifts in. And then when people give nonprofits, non-cash assets, crypto stocks, et cetera, there's no unique stewardship approach. So like someone will get $1 million Bitcoin donation and they'll put them on the same kind of stewardship email chain that everyone else is going to get a year from now. It's like, this is a very different person. Like just taking a little bit of time to everyone's point, like be systematic about it and try to like integrate a new product idea, whatever the innovation might be, like into your existing stack or your flow. Ineffective innovation is really just kind of like, you take 10 really big ideas, you throw them all out there, whatever sticks within the first 90 days you go with, and then everything else you kind of go, oh, there's no opportunity here. Kind of picking your innovation carefully and doing it in the right order, I feel like is largely what makes nonprofits successful.
Amazing. Abby, love to hear your thoughts.
Yeah, like Pat kind of alluded to, it's the inverse of the effective innovation. So if effective innovation is identifying a problem that you want to solve or a goal you want to reach with a new tool, ineffective innovation is getting that shiny new object and then trying to set a goal to reach it with, or trying to find a problem to solve it with. So I'll use this as an example because I'm kind of a Luddite. I was extremely skeptical of AI when it started really coming out and coming into its own. And I didn't have a problem that I was looking to solve with it yet. And it would have been ineffective for me to adopt an AI tool and say, okay, well, now I'm going to find a way to use this. So what we did instead was we came up against a problem. I'm terrible at writing email subject lines. So I started using AI to inform my email subject lines. So it's a silly example, but that's kind of the example. Start with your problem first. That's much more effective than getting a new tool or a new platform or a new strategy or whatever it is, and then trying to shoehorn it into what you're already doing.
Yeah, I think that's such a great point to really look at what are the challenges you're facing and what are the products and tools and new things that will help you solve them. So thanks, Abby. And Cameron, interested in hearing your thoughts on ineffective innovation.
Sure. I mean, I think Abby said that really well, just kind of jogged. Steve Jobs had some famous quote that was really similar along those lines, right? Where, and he probably had the most access to the most emerging technology period, but he hammered home to his teams to really stay with what is the core problem we're trying to solve, right? And not just have a technology and use it to solve something. But from a marketing perspective, and ineffective innovation can mean I think many things. I think probably one of the most common examples we see is really just like not testing long enough with something and not surpassing what we like to refer to as the minimum effective marketing dose, right? And so this might be, you deem email is not really working for us, but you're only sending one monthly newsletter, right? Or something like that. So we'll cover that a little bit later too.
Awesome. Thanks, Cam. Well, I am excited to get into all of the data. So we'll be looking at the state of the industry right now. So Abby, I would love to turn it over to you to go over really the state of philanthropy in 2023 and pulling in some insights from the fundraising effectiveness projects.
Totally. So it's going to be kind of a downer for like 30 seconds, and then I'm going to come up with something much more positive. Give me a second. All right. So when we looked at recent data from the most recent fundraising effectiveness project study, it showed that we're really at kind of a critical point right now as an industry. So here in the middle, you can see that overall dollars given to charity is down a little bit. And a lot of that is due to softer giving from major donors. This, I think, is exceptionally important to pay attention to, mostly because over the last several years, we've seen a trend where overall dollars given to charity is up, but most of that money is coming from increases in major gifts and not increased support from individual donors. So we've seen a lot of nonprofits relying very heavily on major gifts from a handful of select donors. And as those major gifts are softening, now is really the time to focus on engaging your smaller donors and building a community there that will kind of mitigate the risk of losing a lot of revenue as major gifts are soft now, and we don't know what it's going to do in the future. So we know this has been a challenge recently. On the left here, you can see that the overall number of individual donors is down, which means that fewer people are giving to nonprofits, and donor retention continues to be a challenge. So one of the silver linings, though, that we've seen here is that there has been a small increase in donations from recaptured donors. So donors that had lapsed, they had stopped supporting a charity, and the charity had successfully re-engaged them and re-inspired them to get involved. So this tells us that people are willing to re-engage with nonprofits after they've lapsed, which is hopeful. So when we put this all together, we see this picture where individual giving is down and major gifts are starting to slow down a little, but there are a lot of opportunities to reconnect with people and to inspire them to continue supporting you. And you know they care about your work. They wouldn't have donated to you in the first place if they hadn't. So more targeted efforts to re-engage and retain those donors will be increasingly important.
Thanks, Abby. And I did put the link to the fundraising effectiveness project reports in the chat. So go ahead and download that. There's so much information that you can gain from that and really take a look at, what fundraising and looks like today. So would love to learn a little bit more from Cameron on some of the data from the acceleration report.
Sure. Well, I just want to further plug the fundraising effectiveness project report. I mean, I think it's like absolutely must critical reading. And what we see is this interesting trend that, and we saw this in this year's acceleration report and last year's, where, there's a lot going on in the world, right? Like we were all worried about, are we in a hard recession, soft recession? There's all this political volatility, and yet a lot of our respondents were expecting a lot of growth and expecting the revenue to continue to grow. Now, my personal opinion is we also saw that last year, and that's not what happened. That's not what happened in the fundraising effectiveness project. And so I'm not sure always what to take from this. I think organizations are potentially overly hopeful and overly optimistic with fundraising. And so you're on this webinar, which is awesome. And it's clearly like an important time to really be innovating. There's silver linings, of course, but we're going to be talking about a lot of those reasons. So again, a lot of organizations were, anticipating year-over-year growth again, but we also saw that last year. And while we don't necessarily know how that played out for every single respondent last year, my gut feeling is it didn't play out as they had hoped in a lot of cases, unless they were in a particular cause sector. That did like very well kind of during and post-pandemic. And then also, one interesting trend that, from our acceleration report is we definitely saw a heavy increase in the average percent of funds raised online. I don't think this is a huge like surprise, right? But more and more organizations are definitely anticipating more and more of their revenue coming in online. So this almost doubled in our reports year over year as far as what percent of the revenue they were anticipating to come in online. And as we kicked off this poll, you can see, the poll that everyone submitted on this call really lined up with a lot of what we saw in our acceleration report. Budget, limited budget, and lack and limited time were basically like 1 and 2. And that definitely was like something we saw last year, but like kind of a similar trend. But we definitely saw some other interesting upticks, and we even saw that in the poll today with like staff turnover becoming a much larger concern and constraint. We all experienced that major the Great Recession, right? And in a lot of ways, and there's a lot of challenges that comes, especially for nonprofits with those type of things. But yeah, that was like one of the biggest growth of challenges, I guess.
Sorry, my slide's stuck. Okay. Pat, would love to learn a little bit more about what you're seeing as trends in the sector at the moment.
Yeah, on the non-cash side, last year was interesting. So on the crypto philanthropy side, we saw kind of a wonky year in that nonprofits on our platform continue to fundraise. We have a couple thousand nonprofits who fundraise crypto with us specifically. Crypto giving remained pretty much flat, consistent with the year before. The year before was one of the best years in history for crypto prices. And then last year was a consistent downward trend. Donor retention was really strong, and the nonprofits' active fundraising appeals went up. It was enough to counteract the market dynamics up until the end of year, where we normally see most of our volume come in. And that's when the FTX story came out. We had a really big crypto exchange go down. And that was the one 45-day period or so where crypto giving really did stall out for a bit as people kind of clutched their assets and tried to figure out which direction the market was going to take. I think an interesting takeaway from that a lot of nonprofits miss out on, this was true across crypto stocks, et cetera, is the average gift size went down to about $6,500 a unit for like a crypto gift. Stocks and crypto gifts tend to be, between 5 and 10K ish, 30 to 80 times the size of the average online gift because it's a non-cash asset. It's a tax offset donation. Those gifts continued to come at a pretty consistent rate, but the gift size was down. It just means a similar number of donors end up giving these assets. They give smaller amounts because the ultimate tax benefit isn't as high. But even in a down market, in short, someone like a crypto investor, because they bought some crypto when the market was down, they end up giving some donation, just a smaller one, versus when the market is up, everyone's investments are up. If you go back to the slide before this one, again, just real quick, a really interesting takeaway also is like crypto users, average user is a millennial or Gen Z. That makes up 94% of the user base. But about half of wealth is held by people who are baby boomers and Gen X, just because even a small diversification of their capital makes up so much of the money in the world. And then on the stocks front, like super interesting, average stock user over the decade previously was like in their 40s and 50s. Average Robinhood user today is 32. And then on Schwab since COVID, when there was that big surge of people opening brokerage accounts, average new account opener is 35 years old on Schwab. So people in their 30s and below are really getting into investing in non-cash assets. The difference here is that these investors aren't usually working with advisors on the investment side. They're kind of doing DIY investment, opening these accounts. Second piece is they're not working with advisors on taxes. They're doing things like TurboTax. So you combine all of these things together, and what we noticed last year in kind of a down year for markets is nonprofits who were actively soliciting crypto stocks, et cetera, were getting these donations, and the nonprofits who weren't actively soliciting did not, largely because younger donors weren't thinking about it as a donation method. If you ask a younger donor for $10 a month with a credit card, that's kind of what you get. If you ask a donor for crypto stocks, dash gifts, et cetera, you dramatically increase the odds of conversion. Next slide. So yeah, this is something we call the Crypto Philanthropy Adoption Index, which we like to look at. This is pretty much, it pegs how much crypto giving happens compared to the price of Bitcoin, which is kind of used as an index for the health of the overall market. The reason we do this is because, let's say the price of Bitcoin goes down 50%, but crypto giving stays relatively flat. That would be an upward trend in crypto giving versus the health of the market, in the sense that it's outperforming how down a market is. So for the last 3 years, up markets and down markets, crypto giving has outperformed crypto market dynamics, which is just to say when nonprofits look at the crypto market and they think about the investment volatility of if you're trying to buy crypto with the hope of the value going up, there's a very different level of volatility when it comes to accepting a cryptocurrency gift and having it automatically convert to US dollars. That crypto giving has now been really consistent over the last 3 years. And that's largely due to the growth of the user base. There's now a little over 300 million people using cryptocurrency. So it's a little more than PayPal. And because the user base is so large and there's over $1 trillion invested in it, the giving method has rose to the point of being a lot more consistent. And then the things we would highlight as trends that are driving a lot of this are NFTs, in the sense that people are using NFT fundraisers and kind of launching these digital artwork as fundraisers for charity. This is something that's really consistent through down markets. It's becoming a more common way that people virtually fundraise online. B, something called stable coins, which are pegged to the value of a US dollar. It functions like a Bitcoin, but it's not a speculative asset where you bet on the price going up. It just moves more efficiently than a dollar, but it's pegged to the price of a dollar, but using blockchain technology. That became the second most common donation method. And then the third piece would be just overall market volatility drives a lot of this giving. In short, if Bitcoin goes down to a smaller price point and then bounces even halfway back, anyone who bought at the bottom of these ebbs and flows is seeing this large volatility, which creates a tax incentive to give. So volatility for investors, not great. Volatility for nonprofits fundraising can actually be pretty effective.
Oh, so interesting. I saw a great question in the chat. Do we know what is the total percentage of non-cash giving out of all giving?
Yeah, it's tough to get an estimate. You see anything between like 15 and 30%. It's kind of on the sneak tip. It's largely big nonprofits who do a good job of this because they kind of actively solicit it a bit more. And on average, if you look across reports, it's somewhere between probably 20 and 25% to a quarter of all giving. Usually, again, due to organizations who actively solicit it tending to be larger orgs, but yeah, small orgs do a little bit less of the solicitation. I think it could be closer to 50% if people push the pace of play a little bit, just because it's like so much more tax efficient to give crypto stock than it is to give dollars. We always say it's like if you went to buy your groceries with like shares of Ford stock, it's like you're just kind of triggering a taxable event.
Awesome. Thanks so much, Pat. And keep your questions coming. We will be getting into more questions throughout the presentation and at the end. So put them in the Q&A pane and I'll keep an eye on the chat as well. All right, Abby, would love to learn a little bit more about what you're seeing with email.
Definitely. So we've covered kind of the state of the industry. Individual giving is down. Overall charitable dollars are down slightly. There are certainly some challenges that we're facing, but there's a lot of optimism in the industry about what we can accomplish. So I know that we're going to talk about some really cool tech forward things, but I wanted to open this kind of section on successful strategies with just the simple statement that email remains a major opportunity for a lot of nonprofits. And I know when we first kind of kicked things off, I saw a lot of you are dealing with fundraising as a one-man shop, or you're a small shop, and so you're wearing a lot of hats. And so I wanted to kind of lead with this because that combined with the fact that budget and resources can be really challenging for nonprofits, and email, as simple as it is really effective, and it's relatively low cost, and you don't have to there are some things you can do that can prevent you from having to sink hours and hours and hours into an email campaign. But I know when I talk to a lot of nonprofits, I hear that a lot of you are discouraged by the sheer volume of options and new technology, and there is, I think, some discouragement if you don't have a lot of time or resources to explore things like some of the more tech forward things we're going to talk about today. Yeah, you may want to look into pursuing AI fundraising and new tools and new programs and new fundraising strategies, but email is tried and true, and there is a relatively low barrier of entry, and it's what donors want. In the report that Neon One published last year, we found that 48% of donors cite email as their #1 preferred communication channel with nonprofits. And the Global Trends in Giving report, it was put out by Heather at Nonprofit Tech for Good in 2020. More than a quarter of donors said that email is the communication method that most inspires them to give. And Candace, if you would tab over to the next one, I want to show you a slide that I think will be especially encouraging for a lot of you on here, because we found that this is an area that small nonprofits are really excelling in. So when we published our email report and we were pulling all of this information, we found that email is remarkably effective, especially for those small and mid-sized nonprofits that so many of you seem to work for. We found that nonprofits are really doing an unbelievable job, not only of reaching their donors and inspiring them to give, but inspiring them to give generously. So this information that's on this slide came from, I want to put out the caveat that this is the 4 biggest fundraising days of the year. So if you look at email campaigns sent on Giving Tuesday in the last 3 days of December in 2022, the average nonprofit raised a little less than $6,000. Small nonprofits raised around $3,500. And at first that may seem like a challenge, like you need to, I don't know, reach more people and raise more money. But when we took it a step further, we wanted to see what the average gift was per contact on an email list during these 4 biggest days of the year. And we found that small nonprofits are doing something wonderful. the average large nonprofit, so nonprofits that have 1,000 or more contacts on an email list, raise around 88 cents per contact on that list. Small nonprofits raise more than $6 per contact. And that's just with fundraising. So an effective email program can help you acquire new donors, which is a challenge right now. It can help you retain existing ones. It can help you re-engage lapsed donors, and it can help drive interest in some of the more tech forward things that we're talking about, like crypto and stock donations and all of these other exciting things that are kind of coming down the technological turnpike. So I think this is something that it may seem silly to come to a tech trends webinar and talk about email because it's not really a new thing that's happening, but it is something that shows a lot of promise even now. That said, before we dig into Cam and Patrick's additional slides, we have this slide that I talked about, kind of some things that you might want to keep an eye on. This is some things that may not be as successful for you. So this is less of an unsuccessful fundraising strategy and more of an unsuccessful fundraising approach or worldview. And it really is the risk of forgetting individual human beings and those individual people who are donating to you and supporting your cause in so many different ways. So there are so many cool new tools and features and strategies out there, and it can be really tempting to embrace that shiny object and forget the people that you are using that object to reach. So using tech to find people, using AI to start creating email content, and using these tools and options to build relationships with people is valuable. But over relying on these tools can make you seem cold or impersonal. And using too many tools and offering too many options when they're not necessarily what your donors are looking for can be overwhelming. So there is a fine line between focusing on new tech and trends and using these tech and trends to actually reach people and build relationships with them. So I hope we, as much as we all love the tech and the new tools and features that can make your life so much easier, just remember to remember the person. That's going to be really important.
Yeah, I just want to piggyback Abby real quick on the email thing, because like we are the crypto company here. Email is the main strategy, like even for things like cryptocurrency, for everything. And it's largely, it's not necessarily, to Abby's point, like AI and like finding ways to optimize. Like there's definitely cool tools out there, but a lot of it is, it's a very similar problem we see with nonprofits, in-person events that we see with their website. Same thing we see with the emails. It's like, if you want people to attend an event, if you want people to open an email, if you want people to give from whatever that email is, like a lot of it just comes down to copy. It comes down to subject lines. It comes down to whether or not the email is fun, if it's interesting, if it's engaging, if they open 3 in a row and they're going to be interested in a 4th one. Is there a narrative? Do they care about it? It's just like getting good at telling a story and like having the email subject lines and the actual copy being how many sentences do I have to read before I know what this email is about? All of that kind of optimization pays off in ways that I think practically nothing else does in the sector. And no matter what you're trying to ask a donor for, like pretty much everybody prefers, you know, you can see it in the data, to be contacted via email. Like, yes, younger people are more likely to like text each other. There's other tools out there, but getting good at email is what I say, like double, triple, quadruple click on that.
Absolutely.
And then I think the slides were a little like, out of order. I think it's one back that we can jump to the other one. I'll rip through mine here. This goes right back to email, but like people ask all the time, like what makes nonprofits good at crypto fundraising? People see a lot of the Twitter activity. Crypto Twitter is a huge thing. If you're really good at Twitter as a nonprofit, it's an absolute weapon with younger donor engagement for crypto donors in particular. Like if you've got people who can run that channel, your content is engaging, you can build a following, you know, you're good in the DMs. It's a great tool. For most nonprofits, that's not where it begins. A lot of it begins in email. And then we always refer back to this rule of 7 in marketing, which is like your donors need to see a message multiple times throughout the year before they're willing to consider it. Not every email needs to be like a give right now type email where it's a capital campaign. Someone was talking about donor fatigue earlier in the presentation, which is huge. The nonprofits that we're seeing kill it in crypto fundraising, stock fundraising, DAF fundraising, largely are just putting snippets in emails. They're sending out the emails they do normally. They're keeping donors abreast of what's going on. They're inviting them to events. Then it's like, by the way, if you want to give us non-cash assets, crypto stocks, et cetera, you can send that to us directly here. If you prefer to give through a DApp, we've got that as well. Donors seeing that consistently throughout the year, particularly younger donors who don't even think of their assets as giving options because they haven't been worked with financial advisors. There's so much meat on that bone for the average nonprofit. And we see with a lot of orgs that have been fundraising from this donor base consistently for many years, these people who are giving them $10 a month with a credit card, because that's all they've ever asked this 24-year-old for, are finally, coming out of the woodworks, giving their first major gift because their Tesla stock is up a bunch and they can completely offset their capital gains tax burden, or their crypto is going up a lot in one particular year. It's a huge reason to convert people upward. So we say consideration, conversion, stewardship are the 3 stages. When it comes to non-cash asset fundraising, it's not necessarily a crypto campaign. It's largely you're running your capital campaign and you got that snippet in the email. You're throwing your in-person gala event, but there's a QR code sitting there in the pamphlet that they can scan and send you a Bitcoin gift. If they're seeing your end of year Giving Tuesday campaign, and then you set a crypto specific goal off to the side and you report that out because it's a little more exciting. Layering that consideration phase, getting people all throughout the year to understand they can give you assets, and then ultimately usually converting them closer to end of year and then stewarding them separately, depending on market dynamics, not throwing them in the same stewardship journey as everyone else. Creating that unique non-cash giving experience from your first solicitation all the way through their stewardship journey. That's what separates the orgs who are carving this out as a large revenue channel.
All right. Yeah. So I'm kind of building off some of the successful marketing strategies that, from both our report, but also just in, actively working with 250, nonprofits. And it's kind of builds off of, even to Pat's point, of that rule of 7. And, another way we refer to that as the more exposure effect, right? Like as humans, we subconsciously associate frequency with trust, right or wrong. But and so when it comes to marketing, I think one of the top lessons for this year is to just make sure you stop taking less than the minimum effective marketing dose. And so, this is just a chart kind of to think about it, right? To help us visualize it. And when we're trying a new tactic or channel, there's this point where it's just ineffective efforts, right? But if we can cross that minimum effective marketing dose, the sweet spot, the good news is it's incredibly large, right? And so, if you're, say, like posting once a week on social media, right, that's likely ineffective. Or you're only sending a monthly newsletter, it's likely ineffective, or it could be much more effective, right? Maybe you're testing a couple campaigns in Google Ads, or you only spent, $50 on a boosted post on Facebook, right? Like those are all ineffective in that channel, right? So it's fair, you can't just say this channel doesn't work for us, right? What likely happened is you didn't pass that minimum effective marketing dose. So, if you're confident in your creative, whatever traction channels you're looking to utilize, both your core channels and your emerging channels, right? It's all about passing that minimum effective marketing dose. And to be honest, like I don't know if I've ever encountered an organization that has really passed into diminishing returns within a channel. Like they were just spending so much on Google search ads that it just became ineffective. It's pretty rare, in my opinion, for most organizations. And then number 2, kind of building off of that from our perspective on the acceleration report, is to just go deeper into those core traction channels. I think this connects really well with Abby's point, right? Like for email is the #1 core traction channel, right, for most causes, and there's just often a huge opportunity to still go deeper there. So really kind of audit those, like what's going well in this core channel, how can we go deeper, how can we invest more, do we need to upgrade our technology to get more out of our list, what opportunities or features do we need to better understand, and to really scale this channel more aggressively. And when we look at like core versus emerging, this is just how I recommend you think about kind of how you're promoting your cause. Like what is core to your organization, what's emerging, right? And so this might be more for a mid-size or even a larger organization of a core to emerging channel breakdown, but email might be core, your social media might be core, your SEO, maybe your Google ad grant, maybe meta ads, maybe some paid search ads, maybe some display and YouTube ads, your direct mail, your events, your PR. And if you're smaller, it might just be like email, direct mail, events, social, right? And that's okay. But it's like, understand what's core to you, and then prioritize, again, how can we go deeper there and just get even better? And then what emerging channels have the most, high potential for your cause that you want to prioritize, right? I don't recommend doing these all at once, but I do recommend prioritizing them, continuing to test them. Honestly, whatever your team finds most like fun that you think's gonna, best connect with your supporter. Again, to create that human experience, right? That Pat and Abby were talking about. That's like the whole point of these, is to create a strong, supporter experience. So emerging channels that we're seeing now are SMS, influencer marketing, the Microsoft Ads for Impact program, super interesting, like as it, gets tested out by Microsoft. TikTok ads, LinkedIn ads, Twitter ads. We're doing a lot more audio ads, like within Spotify and things like that, and even programmatic. So yeah, it's kind of just what's core to you, what's emerging. And when we look at the acceleration report to try to identify what most organizations see as core, we ask a variety of like importance to, like, is it very important, moderately important, slightly important, or not important? And so email marketing was number one, most important digital channel. I definitely agree with this. I definitely think most causes can do so much more here, send more, personalize more. There's definitely still, opportunity. Next is organic social media. Number three, direct mail, right? Especially for our traditional donors. I saw some comments in the chat there about like, well, how do we cross from traditional donors into next gen donors? And I think that's an important topic, right? But like, it's like, what channel can you best connect with that audience that you're prioritizing, right? Then we have SEO, Google Ad Grants, many consider core, SMS, many organizations consider core, and then meta ads, which in my opinion should be core to many causes too, especially if you have any sort of ad budget.
All right. Thank you so much, Cam, Pat, and Abby. This has been so incredible diving into the data. Now I want to really move forward into what's next and what all of this really means. So yeah, I would love to just get this started off on what really is the future of fundraising.
I think this is going to sound kind of silly, but I think the future is really intentionally creating really positive, wonderful experiences for donors. And this doesn't just reference the donation process. This references everything that happens before, during, and after the giving process. It includes, maybe if you're using social media, someone sees you on social media and the post that you are putting up that inspires them to give, that's part of their experience with you. The donation process, the confirmation page, the language you use in the receipt, your follow-up communications, even the way you frame future appeals, putting together all of those pieces will create a really beautiful relationship where, whether or not someone knows you individually, they are building a personal relationship with your organization and your work and the results that they're able to help you achieve. I think this will be especially important as nonprofits work to build relationships with younger donors in particular. Young donors don't have the brand loyalty that baby boomers and the greatest generation have had. If you don't give a younger donor a really wonderful experience and make them feel like they're part of a community of people who are building toward solving whatever it is that you're working toward, they're not going to be as inclined to come back to you as they would be maybe their grandmother who has given to you regularly for years and years and years. So creating those positive experiences, cultivating those emotional connections between your donors and the people that you serve will be a really important part of attracting donors and then retaining them over and over and over again.
And so, Pat, I'd love to learn a little bit more about the future of non-cash fundraising.
Yeah, sorry, I'm just hitting send on the Q&A, diving in and out. Keep popping those in the Q&A. We put a credit card imprinter here, if you're starting to use its imagery a bit more often. There's a couple interesting things happening. in non-cash fundraising that appear to be ongoing trends that I can't imagine changing anytime soon. So one last year, like, was what tested the resolve of crypto philanthropy for sure. Just like a really down year for crypto, and it was our second best fundraising year of all time, second only to the year before, which was a huge year for crypto prices. The growth of the user base, which has now grown through 16 consecutive bear markets, that's not going away anytime soon. Younger people, again, 94% of these users are millennials and Gen Zs. Almost 90% of millennial millionaires are crypto investors at this point. So it's just an enormous investment trend. So crypto and NFTs as like a tool for donors to give, just because it's a thing that these people use in a way that they're going to be making transfers as an option on nonprofit sites, is not going away. And then B, as a more dominant force in non-cash giving that's starting to tip into the stock range. For instance, if you look on Google Trends, you search donate crypto searches versus donate stock searches, you can see that they've reached parity in the last year for the first time. So because it's a younger donor base, people are just looking for ways to give their crypto. Crypto being around and common, especially as we look at the great wealth transfer, as a lot of the money leaves the hands of people who are investing more primarily in stocks and real estate, and it's put in the hands of people who invest more primarily in crypto, it's going to become a larger percentage of non-cash giving. Stock giving has gone digital. This is a huge thing. There's so many nonprofits. We touched on this in the ineffective innovation piece. So many nonprofits have an option to give, quote unquote, where it's like, yes, you can send us a DAF transfer. Here is, a PDF with instructions on that. Or yes, you can send us a stock gift. We have brokerage instructions. You can get on the phone with us and then send a fax and whatever that process is. Like, that is dying off much more quickly. And the need to have kind of a widgetized stock flow is becoming a lot more common. Like, we of course love our product for that, but like, there's products out there and it's becoming the norm, especially for younger donors. A young donor is under the age of 35. We merged with this company Shift4, whose founder is a billionaire in their 30s, sent a $100 million stock donation to St. Jude and bugged out over it. That was part of the reason we even built the product, because he was doing crypto stuff with us. He's like, can you do the stock thing too? Because I've never thought it could be so miserable to give somebody $100 million. Donors are heading in this direction. That's why we have kind of the credit card imprinter here on the right, where it's like people aren't going to tolerate the same levels of friction and steps in a checkout. And then on the DAF piece, this is a cool new integration we added recently, the DAF giving through Chariot. Chariot, if you're familiar with Plaid, which pretty much lets you log into a bank account and like link it to platforms or send transfers directly within an interface without having to go to your bank's website, log in and send the transfer separately. Donors can now do that with their DAF transfer. So within the actual checkout, they click your donate button if they want to send a DAF donation, which is obviously just like crypto and stock, significantly larger average gift size. And a huge percentage of non-cash giving goes through DAF still. Donors can do that now if you have a tool for that. They could be looking at the option to give you $10 a month with a credit card and instead choose to send you the $10,000 they have sitting in a DAF without leaving your interface, just clicking on their Schwab account and selecting transfer. It's even got a boost button, which is cool. It uses AI to sense, how much capital is sitting in that account and ask you to like add a little bit on top to juice average gift size. The long and short of all of this is card donations are going digital, right? Like Apple Wallets, Google Pay, Zelle, et cetera. Crypto and NFT donations have become extraordinarily common. Over half of the Forbes top 100 nonprofits are taking crypto at this point. 80% plus of those are on the giving block. Stock giving is super digital, and there are still so many even big blue chip nonprofits we work with who used to have like brokerage instructions sitting on a page that's buried on their site, completely untapped potential on the stock front, especially with younger donors. And DAF giving, if you don't have a tool that lets you give that way directly through the interface, is going to quickly be absorbed by the nonprofits who provide a quick streamlined checkout. If you force donors to keep going to a separate site and initiate DAF transfers, you're going to lose to the organization to remove that friction. So it's going digital, it's becoming frictionless. And for younger donors, their non-cash gifts are going to the nonprofits who are actively soliciting them.
Thank you so much, Pat. I think that point that you were saying to frictionless is basically the way to go. It's how you keep people engaged in giving. And I would love to actually get more into that during the Q&A. So we'll definitely come back to that. In the meantime, Cameron, I really want to learn what you're seeing as the future of marketing in the sector.
Sure. I mean, I think that this is like honestly, hopefully a simpler concept, but surprisingly, something that I think the sector is still building muscle of. And when we work with organizations of really all sizes and sectors, and it just comes down to, I think the future of marketing is just moving faster, being more agile, and really like, having your core channels perform well, but then being comfortable testing emerging channels much faster. An innovative marketing team in 2023 is just an agile marketing team. We're not doing, multi-year strategic marketing plan. I mean, yes, like, doing that strategic planning is important, but, technology is just moving so quickly. So, I think for the vast majority of us on this call and with a lot of our partners, it honestly took a pandemic to force many to take more risks online in their online marketing efforts. And yet those risks were often just so positively transformational. Now having a virtual component to your live events or your 5Ks and all these things. And it just really opened up a ton of new audiences, a ton of new markets. And, I think it's all about just like prioritizing speed over perfection with some things. I mean, obviously it's like, I just like when it comes to creative, when it comes to posting on social media, it's so much of it gets just like, there's so much overthinking. And, I think there needs to be more of a bias towards action. That's like really what the future of marketing is. I mean, that's what I encourage our team to do. There's stuff that goes on our social media. I'm like, I don't know, but like, let the data drive it, let the team move fast. I promise no one's going to remember what you posted on social media yesterday. And it's just about like knowing what emerging channels to prioritize. It's like, where's your audience attention? Like, where's their attention actually at? Where are they spending time? Like what channels are they just glued to on their phone? And if they're a supporter, their attention is there, you need to dive in. You need to figure out how to connect and build a strong experience and engage on those channels. And I think it's like do things to understand whether they work or not. Like learnings from one platform will apply to a future platform. I think like Snapchat's a great example of this, right? Many of us might not use it today, but if you had somebody that was, targeting next gen donors and was taking a shot at it, well, those skill sets were super applicable to like Instagram stories and reels and like TikTok and all of that, right? So it's just about learning and being optimistic with it and having fun and ultimately you need people that are passionate to do this work. I see things in the comments like we don't have a marketing team. You should see some of the stuff I see nonprofits do with volunteers, and it's about like just engaging some capacity, whether it's like part-time team, agencies, whatever it is, so that like marketing and like being futuristic and trying things is just a part of what you're doing, right? It needs like you need to understand these things even if you are the executive director, in my opinion. And these are just some like wins and highlights that I wanted to bring to the table. This is from our acceleration report, and we just asked the survey respondents like what strategies surprised your nonprofit, and what like really worked. And so we spent 150 on Facebook ads. We raised 16,000. We switched our online donation experience to be more intuitive. Raised 50,000 a day. 300 on search ads, raised 5,000. I mean, you can read these, but like I love seeing these wins, and it hopefully is, again, I think a lot of this data is important to support you and encouraging your organization to test things faster, especially emerging channels. So, hopefully you can share some of your wins in our next acceleration report. And then, talking about like the future and what's next, from our acceleration report, this is what, we really like see as the 8 top emerging channels. So meta ads, I mean, if it's not core to you, hopefully it is, because they really do work, right? Like so much attention is on Facebook and Instagram still. And while there's been tons of changes on the platform, it's still very effective. So I still think it's worth prioritizing as emerging channel if it's not core to you. Same thing with the Google Ad Grant. I mean, this is where if you don't know about it, you can have $10,000 in free search ads. And it's a great way to like build a digital advertising muscle. You can certainly drive giving and things like that, but just like the power of search intent is so great, and it can really support all parts of your marketing funnel and be a really consistent source of traffic. LinkedIn ads, I mean, I think like they've been doing a lot of work on their platform where I find it a lot more engaging, and I see a lot more people doing that. So and it's not just all work, right? There's all sorts of conversations happening. I think organic LinkedIn work is really interesting too, but the ad side, you can do a lot of really interesting targeting. Paid search ads. So, this is just when we say paid Google search ads or paid Microsoft ads, we're just referring to non-Google ad grants. And there's definitely benefit there too. Like paid search ads and ad grants are better together. And that they were, I've seen a lot of other reports too that, they're really effective, especially during year end. Microsoft ads for social impact. I mean, this program is currently not taking new applications, but like if and when Microsoft reopens this, it's really exciting. So basically, the program keeps evolving, but there is this level of free spend on the Microsoft ad platform in Bing and these things like that. And obviously all the moves Microsoft is making with Chat GPT and things like that. Yeah, I think it's an interesting platform, and we've already seen really good results, and it has a little bit less restrictions as compared to the ad grants program in some ways. Display ads are powerful. YouTube ads, I personally think that this should be higher for certain partners. Like we see a lot of great work, a lot of great brand awareness. And then TikTok ads, right? Like again, we don't necessarily know what will happen to TikTok long term, but they're putting a lot of resources into improving their ad side. You definitely have to have a certain like creative capacity to really win on that platform, but it's something we find both in this report and with our clients that we're testing more now. And then, I think the future of marketing in a lot of ways is just like to adopt innovative technologies. I think it's like we can talk about all these things, but unless you have the infrastructure, it can really be, really hamstring your organization. So I think nonprofits just built on innovative tech and marketing automation are nonprofits ready to scale. Like you can really accomplish a lot with a small team if you just understand these tools. And organizations that have that person, they really understand the need of supporters, and they're just going to outperform significantly the organizations that aren't really utilizing these tools to their fullest capability. So this can break down into your CRM system, your donation softwares, tools for social media, tools for ad management, email tools, of course, and more. And in my opinion, like effective donation software is just the price of entry in 2023 and beyond. Today donors, especially new ones, they just have zero tolerance for a poor giving experience. It's just how we use both when we're engaging with a cause, but also just in our day-to-day, right? Like we expect things to be fast and smooth and clean. And if you want to grow, you need to invest and update these softwares, and it really will pay for itself, as long as you're getting the word out about what you do. And a lot of data I see, is like when donors do have payment options, both conversion rates and gift sizes increase. So your cards, ACH, Venmo, PayPal, crypto options. So, definitely check out Neon One. Like we love their software and all that they do to create a really strong experience. And then of course, like Giving Block and what they do to, again, not just give crypto options, but to have it deliver a strong experience and everything Pat's mentioned. So I just want to say, like, it's more profitable to prioritize user experience over platform costs. Like what technologies you use should not be like a CFO decision and is trying to keep the payment processing fees as low as possible. Like this should be like a CMO decision or like, development decision. And then, we're definitely bullish at Community Boost, like in utilizing AI and what's possible, right? Like a lot of the biggest challenges there were limited resources, limited time, right? And it can really be a huge time saver. And I don't think we need to overcomplicate the topic too much, in my opinion. But I don't think AI is just going to replace humans. I don't think it's going to replace development. But I do think humans who use AI will replace those that don't. And it's it's just the beginning. It's a crazy world. And so again, we talked a lot about like building the muscles to try new things faster. And so OpenAI's ChatGPT is here. It's a huge time saver. And Google Bard is live too, which is also really interesting and should definitely not be ignored by any means. Like if your organization uses Google Workplace, like you can turn that on for free. And they're both really interesting. Like what we're seeing at Community Boost, our team prefers a lot of the copy creation and editing currently in ChatGPT 4. And with Google Bard though, like it's connected like live search data, where ChatGPT is only going up to data, I think to like 2021, Google Bard is bringing in like real-time data of what's happening on the web. And that's, I definitely want to not bet on Google to potentially win a tech war, right? So I would pay a lot of attention here. We are using it a lot with like writing assistance, copy ideation, grammar, cleaning up, like rewriting emails. You can write, SEO keyword, like, rich copy that's SEO friendly, right? Copy for sure, obviously edit with a human voice, and most importantly, fact check. But, this is an example. If you haven't tested these tools yet, hopefully you have, but, write 5 meta ad headlines for Save the Children. And like within seconds, there's 5 headlines that I would not be afraid to test when I'm running meta ads or Instagram ads, right? Like join the fight for children's future, support Save the Children today, be a hero for children in need, donate to Save the Children. Together we can change lives, help save the children now, right? And I'm like, okay, well, can you make it more creative, right? And in a second, 5 more. So super interesting. This could be a whole topic in itself, but there's also a lot of other powerful tools to potentially support design, to potentially, create like website designs faster. Even coding, right? That's like, I think the future of these tools too. And, we'll definitely be paying attention to this and creating more content of how it can really empower organizations to move faster and hopefully accomplish more with less. That's really the goal. And then I also think the future is really, I just want to reiterate that point of you got to systematize your innovation process. Having an innovation process is far greater than just your organization having this desire to be innovative. So, as a team, like build and enroll your team into that process, and you're just going to see much more consistent breakthroughs, and you're going to have a much improved rate of learning. We experienced this at Community Boost. For a long time, we're like, oh, we want our team to be, more innovative for our clients and to help them, test these things faster. But really then when we dedicated, like, this is our innovation team, that's when things really started to move. So, these are just 4 steps to maybe consider in creating your own effective innovation process. So, involve executive leadership, create a cross-disciplinary innovation team or committee or however you want that to look, and then build iteration into that process. And then, as we were mentioning earlier, just don't forget and always put the supporter first and the supporter's problems first when it comes to whatever you're creating. But yeah, I'd love to open that up to Pat and Abby as well. Like any recommendations you all have for, rolling out an actual process when it comes to innovation.
I wanted to reiterate what you said about iterating. I think so frequently it is really tempting to view innovation, new tools, new strategies, whatever, as a silver bullet that's going to solve all of your problems. And so you get the tool and you Pat kind of alluded to it, like you add the option to your donation form or whatever, and you sit back and wait. And very infrequently is anything you're going to come up with in an innovation process going to be a build it and they will come kind of situation. Try something, see what happens, tweak it, try it again. It's an ongoing process. It will always be an ongoing process. And yeah, you can come up with really innovative ways to automate tasks or generate copy or build CTAs or come up with images or whatever, but there will always be room to improve, and periodically reviewing your process and what you've been doing and iterating upon it will make you successful in the long term, instead of getting a tool and hoping that it fixes whatever problem you're trying to solve.
Yeah, I think that's a great way to encapsulate it. Like the iteration, the staying consistent, we're all kind of circling around similar themes, which I think is important. I guess like one addition on all of that is like figure out what you're interested in. Like this is true about a lot of things. Like if you're resistant to it and you don't really like it, but you feel like you have to check a box and you're spending money on it, like you're going to lose interest so quickly. And it doesn't need to be you, but it's someone on your team, like crypto, for example. Like if you have somebody who's like really bullish on crypto and they're into NFTs, they like talk about it internally, you're like setting up a solution, like let that person go into the DMs on Twitter. Like that's going to be like an energy creator, not an energy destroyer for that person on your team. Like when you find those connections between someone really is interested in something categorically, and you can kind of let that person own it and run with it, like then you can bring those things into your organization and know that it's going to kind of breathe life in instead of kind of chipping away at your energy and your resources. So like figure out what you're genuinely not going to lose interest in, because again, iteration, consistency, all this stuff, it's like brushing your teeth, right? Like if you're going to do it for a day and then get mad when you wake up the next day and you have to do it again, it's like you only have so many at bats where you're really going to stick to that. So just like try to pick things you're genuinely interested in. And then the other piece is like, you don't have to make decisions all at once, which we keep saying, like this one big blue sky retreat where you make a plan, you try to stick with it. Like you should be getting into a room and moving around the order and deciding on the scoping of it and just like continually having these little sessions where like there's not a lot of pressure. There's not a lot of ownership of one thing versus the other. And you kind of slowly figure out which pieces have fallen into place and what you want to dedicate time and resources to. And then you move on it. If you're the innovator at the organization, I strongly recommend this, because when you come in with that big PowerPoint presentation where you want like crypto or AI, whatever else, it's a lot of pressure on you to make it work. And you're kind of like steering it. And then like your first at bat, if it doesn't work, you can lose kind of the buy-in. So it's better to have people meeting consistently and kind of slowly get those pieces into place. And then the other thing is like, if you diversify how many people are interested in that process, it just takes a lot of pressure off you to like make the final call and make recommendations. Your leadership is gonna be more likely to be bought in, and it's not going to come as this big surprise that people kind of refuse to integrate. So meet consistently about it and don't make decisions too quickly. You'll end up innovating more often and more effectively.
All right. Well, thank you so much, Pat, Abby, and Cameron. This has been really, really insightful. And I do want to really leave everyone with something actionable. And I think that there were tons of things that we can take away. But what is like kind of a big idea that you want attendees to take away from all of this data and all of this discussion?
Yeah, I'll go first. Our main thing is like having a non-cash strategy. So like we talked on this a bunch. Like if you have a donate crypto button sitting somewhere on your site at the end of like a checkout flow, and you have like brokerage instructions sitting on a page somewhere, and you get like DAF checks in the mail, like you do not have a solution in place for non-cash. And this is not just like shouting us out. There's other platforms, right? Like you can go explore options, but like you need to have an active strategy. Like younger donors, pretty much anyone under the age of 35 doesn't look at this as an option. Your older donors have given you the stuff because their advisors have recommended it. People aren't working with tax and financial advisors. So people have all of this capital, they're investing along similar patterns, and they're just not being asked by advisors or nonprofits to give this way. So part of the reason that donors are getting older and aging out of major gifts is because you're not asking young people for the type of transactions that actually increase their gift size, i.e. non-cash assets. Like all of the really big donations, when someone owns a company, they're not going to send you cash. They're going to send shares of their company. They're going to send stocks they've invested in. You know, sometimes they transfer real estate through someone like a Renaissance charitable. If your organization isn't asking for non-cash assets effectively, you have no idea who in your audience has crypto, who has stocks, who has a DAF account. And that's a huge blind spot because you're probably sending hundreds of people emails asking for $10 a month. And they're sending their DAF and their stock donations elsewhere. So an active strategy is absolutely necessary, and you can't have a tool that's from like the 1990s. People aren't going to get on the phone with you to try to send you shares of stock. They're going to send you $10 with a credit card, not because they don't have the giving potential, but because it's just an absurd degree of friction to expect from especially younger donors these days. So That's my big takeaway. You need to have fundraising strategies and stewardship strategies that are unique to non-cash assets if you want to know what your donor's giving capacity actually is.
And Abby, interested in hearing your action item and takeaway.
So I think my action item for everybody on this call is going to be like a 3-step thing. Take a look at what you're doing. Look at your core channels. Identify what's working and identify what's not working. And then from there, start iterating and trying to pull in innovation. So someone in the chat mentioned that people are not reading their emails. Okay. So you know that right now email isn't working for you. So start looking at where you can get innovation in there. Can you revamp your email strategy to be more effective? Can you use something like AI to maybe get you started presenting information in emails in a different format? Can you use something to segment your messaging so people are more willing to open your emails? If that doesn't work, iterate again. Where are they spending their time if they're not in their inboxes? Are they on social media? Are they using platforms that maybe you're not on? So identify what you're doing, what's working, what's not working. And then when you identify what's not working, set goals and try to solve problems and then work toward that using these innovative tools and strategies. Doing that will help you more easily kind of focus your attention on different tools and strategies that can be effective for you. And it will kind of help you paint a picture of what your supporters are doing and what they want. And that can carry you really far.
Thanks so much, Abby. And Cameron, what's your action item for everyone?
Sure. I think it's evolved to 2, but I think one is, to stop taking less than the minimum effective marketing dose when it comes to trying new tech trends in marketing. But I think the second one that is really kind of elevated for me just based on today's conversation is, you got to find people really passionate about tech, innovation, and marketing to do these things well. So whether it's a current in-house team member, are your marketing or people, are they like really passionate about these things? Like they need to be. Or if that doesn't work, a volunteer. Or of course, the agencies you engage with, like Community Boost. I think like if you don't have the time or resource, like find people that are, and that's what's gonna I think greatly improve your chances of success in trying new things.
Awesome. Thank you so much, Cameron. And last thoughts, keys to success in moving forward. Abby, if you want to start us.
So something I hear very frequently is people saying that they don't know what their donors or their supporters want. And my answer is like, yeah, you can use data gathering to find some information. The simplest way to figure out what they want is simply to ask them. When we pulled all of our research for the email report, we looked partially at words that increased engagement in emails. And in subject lines, having the word survey in your subject line prompted remarkable engagement. People want to tell you what they want. We love talking about ourselves. Ask your donors what they want, why they're giving to you, what motivates them, and give them that. Ask what they want. And if you don't want to launch a survey, sit down with a couple of your donors and ask them that way.
Awesome. Pat, interested in your final thoughts.
I have a new final thought because we've gone through mine too many times. Off of that, like asking donors what they want. People say all the time, Abby, to your point, where they're just like, well, email doesn't work, or like this strategy doesn't work. It's like, you're probably not fun. It's like one thing that nonprofit, like one, like the fun, is it engaging, is it exciting? And then I guess like B, do people actually like understand and like want to participate in like the impact? Like, are they buying into the mission? Do they understand it very clearly? Is it inspiring? Like so much of what nonprofits do, they're looking for like a technology solution, like a new donor audience to access, like an easy button, a new giving method, opening doors. But it's like once they walk in there, sort of what's going on. I can't tell you how many people are just like, events don't work. And then you look at the event and it's just like, it's a golf outing and it's 6 hours from their headquarters. And it's like, they're only inviting people who are, like 15. It's just like, they don't have cars. You're like, well, maybe the event isn't the issue. Maybe the event's just either not fun or it's like set up the wrong way. When it comes to innovation, like the tool should be enhancing what is already kind of like fun, engaging, stimulating content or opportunities for the donor. And those things should connect to your actual mission, right? If they show up to an event, it's like, you know, a crypto fundraiser, they can see a live stream of some DJ playing music and they'd want to be there to begin with. And then they know that it's like every $5 we raise is going to like put a meal in a kid's hand, like whatever that thing might be. If you connect those dots, they understand the mission, they see the impact and the events of something worth participating in. The actual like interface, the streaming thing, like that's what makes it work, right? It's not the tool itself. So if you want to get like better at fundraising, all of these tools and innovation are great, but like make sure the things you're doing are exciting and the content is actually like worth reading and engaging with.
Thanks, Pat. And then Cameron, what's your
Sure.
last thought?
Yeah, I'm going to change mine too since we're allowed to do that now. Pat setting the precedent, but you know, I think like there's obviously a lot of data here. You're going to be able to download these 3 reports, which is great, right? But really just using that data to hopefully get buy-in as necessary to like try these new things, right? And then from there, I mean, we covered a lot, right? But just re-looking at like what's core to you, you know, what's the priority, what do we want to go deeper in, and then yeah, what emerging channels do we think are gonna, you know, best resonate with our audience? And then from there, like you can only like learn and take in so many webinars. You just need to do, like you need to try these things. You can often Google, like watch YouTube videos. There's tons of ways to like get in there and try. And you know, of course, we do many of these marketing things at Community Boost as well, both has a full agency where we do it all for you, and we even have our own accelerator program where we can really help you do it and gives you all the coaching you need outside of, you know, the webinar. So but really just getting in there and then rolling up your sleeves. I promise it's all really learnable. You know, we hire plenty of people that have never executed in these things and train them up, and it's, you know, anyone can learn this as long as they have a passion for it.
Wow. Well, thank you so much, Cameron, Abby, and Pat. Go ahead. I pasted the links in the chat, but you can go ahead and get all of the reports from today. Keep the learnings going. We've talked for 90 minutes and you can get more applicable insights when you download the reports, and yeah, keep it with you to guide all of your decisions all year long. So I do want to get to a few questions. There's been so many really, really good questions. I'm afraid we're not going to have time to get to them all, but I'm going to go rapid fire and shoot them out to you all. I saw some really great questions in the chat and also in the Q&A pane. Virginia asked, a lot of these points also drill down to user experience, another area that all my clients are so resistant to and or don't understand. Thoughts on how to have these conversations with leadership that drive change? So this is kind of going back to that frictionless experience. How do you convince leadership to buy in?
I'm going to start on this one because I have really big feelings about this. So I think the number one thing to answer first is, why are they so resistant to this? Are they afraid it's going to cost you money? Are they in the space where, I know it's very tempting, especially as a board member, like it's been working so far, like just fine. Like, why would we change it now? So identify why they're being really resistant. My guess would be they are afraid of change, which is understandable. I don't like it either. Or they are afraid it's going to cost money or negatively impact your revenue. So what you can do in those instances is maybe sit down with the people that don't understand the concept of friction and ask them simply to make a donation to you. Go through the process, see what it looks like. Do they get stuck anywhere? Ask them to go on your site and tell you how you can accept a stock donation. And if they can't figure it out, no one else is going to be able to figure it out either. It's awkward sometimes to ask leadership to sit down in someone else's shoes and go through a process, but sometimes, especially if there is fear or trepidation around a change, it's the only way to show them that there is a better way to reach your community. And if you know what your board members are like, you can supplement that with some things. If they're really data driven, get research from some of these reports and show them that there's room to grow. If they are more of a hands-on person, ask them to go through the process themselves. If they are concerned with the way your organization is perceived, talk to your other donors and ask them where you can improve and bring that to them. if you can understand not only why they're being reluctant to change, but also understand what will motivate them to change, you can take them really far down the process of like identifying a problem together instead of you just telling them that there is one and then working together to find a solution.
Yeah.
I'd like to tackle that too. I mean, when it comes to user experience, to be honest, I feel like it's not even just the nonprofit space, but I feel like most industries just tackle it really wrongly. And it makes it even more challenging, right? Like when it comes to, oh yeah, we're gonna create this whole user experience, it's, those often take way longer than originally scoped. It becomes all these people in the room, no one can agree on anything. And really our approach at Community Boost is, we're going to deliver an initial strategy, might talk to some, donor supporters, come up with some plans, like general architecture of a site and these things. And then from there, like get your launch pad up, get that initial rebuild up. And then from there, it's all about constant growth and iteration. And just, I think kind of to Pat's point earlier of like, when you make innovation this big, scary, huge thing that has to be absolutely huge and perfect, it really makes it way more challenging. And so we've really tried to break that down in our offering. And we had a lot of success and people feel less stressed and they know it's going to be optimized. And also, most organizations, you need like whatever, if you're investing in WordPress or Webflow or something, like your team has to be able to edit it and execute on it. And if you're buying something that you can't, that's the problem, right? A lot of these experiences die because teams aren't confident in making change to their site consistently.
Yeah. I know we only got through one question because we all answered in pieces, but I think this is like a really just important last thing to hit on. Like, I don't know like the perfect way to frame, but like pretty much like setting a competitive standard is like a really easy way to shortcut a lot of these steps too and by that, I mean like be competitive with an organization or multiple organizations that are going to keep up with these things and just like attach your organization's mindset to that org. Like there's plenty of organizations that your nonprofit competes with, quote unquote, for donor headspace. And you can just grab their websites and their process and everything. You can put them in front of your organization, like your board, your leadership, and they'll be mad about it. And then they'll want to do the thing. Like just find the 3 or 4 nonprofits that set the standard in your industry. It's just like, well, do you think, American Heart Association does a good job fundraising? It'll be like, yes. It's like, well, this is what their experience looks like, and here's ours. Do you think that's an issue if donors are picking between these 2 options? And it's a lot easier than versus arguing in a vacuum where you're like, here's where we are, here's where we could be. The why there needs to be justified by like all of these infinite things. If you just show them that every organization worth its salt is doing these things, if you show again like Forbes top 100 charities, like the majority of them are fundraising crypto, it's like, okay, well, this is a normative standard now in the industry. Like bringing that to your board versus trying to like make the arguments on all of these like logical points. Sometimes it's easier to just show them like, hey, keeping up with the Joneses type mentality. Everyone's already doing this. So you can either not do what everyone's already adapted to and fall further behind, or we can do it. And that often kind of shortcuts the need to justify it.
Yeah, absolutely. Such great answers to this question. I'll just add on, lean into the return on investment. Such a small increase in conversion rate will ultimately pay for the whatever it is, the products you're investing in dividends. So it is really just a way to say, hey, just by increasing our conversion rate on our donation form, just by a few percent points, like it's really going to impact the dollars that we raise, and kind of pitching it that way can also help get the budget and buy-in as well. So all really great points. There's also I don't know, well, I know we're a little over time. Are you down for one more question?
Yeah, I was gonna say too, can we ask people in the chat to just throw in like what they would want us to do the next one on as we answer this next question too? Because like, we want to get this crew together and like cover more topics, whether it's like more annual report stuff or things you want us to do deeper dives on. Like what content would you like us to unpack further, or subjects we didn't hit on that you'd like to see us produce some webinars on? And then Cam, I think you had something.
Oh no, go ahead.
Okay. Candace, if you want to do the other question while they fill that in.
Yeah,
I don't know
and
if
I also know that we do have a last poll. So we want to continue the conversation with you all and continue to get in touch. So would you like us to follow up with our teams and really discuss your nonprofit's fundraising goals and how we can all support you and taking that to the next level? And yes, go ahead, put all of your suggestions in the chat. What would you like us to cover next? This is such a great group here when we're really diving deep and really coming at these big problems in the nonprofit sector from all different angles. And so I really appreciate all of the insights here today. So what would you like us to chat about next? I've been seeing a lot of conversation about AI. We could do a whole session on AI, but yeah, what would you like to learn most next time? So put that in the chat. And to really close us out today, I just want to ask, there was another great conversation in the chat earlier about the disconnect between marketing and fundraising teams. And so that can really sometimes drive challenges in the innovation process where marketing is thinking one thing, fundraising is thinking another thing. What would you all recommend for teams to really get on the same page when it comes to adopting new technologies and solutions for their organization?
All right, I'm going to jump in on this one too, because I have had recent personal experience with this. So just to affirm those of you who are frustrated by this disconnect, I truly don't think you can have an effective fundraising program without marketing. Working together, you have to be in lockstep with your marketing team. And I know how frustrating it is when that's not the case. So please be encouraged. It's not just you. This is a common problem. It happens everywhere. Something I have seen work very well is kind of two things. One, meet regularly with your marketing team and come up with a shared calendar so you can be in that lockstep, whether you're putting together a direct mail appeal or posting on social media. Doing that, whether it is on a weekly basis or a monthly basis or whatever. Like, no one wants an additional meeting on their calendar, but sometimes you just have to do it. So work together, come up with a shared calendar, identify common talking points, identify themes and motifs, and even images that you're going to use consistently across your marketing and your fundraising efforts. The other thing that I would really encourage you to do is dedicate 1 or 2 people on each team who are responsible for keeping in touch with the people on the other team. Have someone from your marketing team that regularly meets with your fundraising team to talk about what they're doing, what's coming up, and what they're thinking about in the future. Similarly, have someone from your marketing or your fundraising team who is the point person that talks to the marketing team, tells them what campaigns are coming up, what are the stories you're saying, what are the impacts you need to communicate in your marketing materials. Having that conversation, whether you choose to do both, have regular meetings and have a point person, or just choose one or the other, those will be a huge help as you try to unify your messaging and work together, not only to raise money, but also to celebrate the impact that you're making right now.
I love that.
Yeah, I think it's well said.
Amazing. Well, thank you all for being here. This has been such a wonderful conversation. To the 77 people that are still hanging on with us, you have done a great job. So thank you for being here today and being on with us through the end. I hope this has been helpful for you, and we will be sending out the slides and recording and following up. So we cannot wait to continue engaging and continuing to support your innovation and growth at your organization. So yeah, just incredible. Thanks, Cam. Thanks, Pat. Thanks, Abby. Such great reports. Get the reports. I know we'll send them out in the email as well, but this is your last chance to grab these reports before we end our time today. And yeah, couldn't be more thankful to all of the attendees and our speakers.
Thanks, Candace. Thanks, everyone.
All right. This was good. Well, happy Tuesday. Have a good rest of your day, everyone.
Thanks, everybody. Bye.
Bye.